If you're thinking about buying a home, selling a home, or just curious about the market because you happen to live in Tempe, well, we have got all the metrics and the data available to you so you can keep an eye on what's happening. So I've been looking at the data here in Tempe, and there's some mixed signals, if you will, for the market. But overall, it seems like a pretty balanced market. So, Summer, I'm just curious, what's your take on just the general overview of the Tempe market right now?
Yeah, absolutely. We're seeing it to be just nice and healthy, not overly heated, not undercooled, just nice and healthy.
My name is Scott Wynn. I'm with the Wynn and team at Neo Home Loans. I'm a mortgage professional. I like to keep an eye on what's happening in the real estate market because it helps me better serve my clients. But I like to have a real estate professional, a local expert, to help us in really digging into what's going on in the market. And that's why we've got Sommer Decker here with REMAX.
Thank you so much for having me. I'm really excited to be part of our little conversation today. Yeah, I'm with REMAX Fine Properties. I've been in real estate since 2009. I have always been in the Valley, so I am just excited to help people buy and sell homes. And as I call Tempe my place of residence, really excited to be talking about Tempe today as well.
Awesome. Well, thanks so much for joining us. So, as far as the market goes, I like to look at each individual area of the market, and I like to put an indicator on it. Like, is it a hot market, meaning it's more geared towards a seller's market? Is it a balanced market, or is it more of a cooler market that would be beneficial to the buyer side? And not that it's always that clear, but that's kind of what I like to look at in each of these areas. So the first metric that I looked at is months of inventory. And you can speak to a little bit about what that means, but currently it's sitting at 2.1 months. That's down from the last few months where we saw a high at about 3.2. So can you share a little bit about what months of inventory is and what your take is on where that's at and whether that's more on the hot seller side or on the cool side?
Yeah, absolutely. So months of inventory is a calculation where we take a look at the number of homes that are currently on the market and the number of homes that are currently under contract. And if we extrapolate out from that, how long it would take if no more homes came on the market based on how quickly homes are being purchased, how long would it take for us to run out of homes? So that's where we get that number. A number I saw was closer to 1.7 for our months of inventory, but I mean, that fluctuates day by day just as
Sure.
we look at number of active listings or if we're including coming soon and not that sort of thing. But either way, 1.7 months, that is, or 60 days on market is what a seller might be looking at in terms of marketing a property. And historically speaking, that is a great number. Historically speaking, 3 months is even a healthy, good, balanced market. Here in the Valley, we've tended to see time on market be a little bit shorter, maybe closer to 30 to 45 days. But even still, I am real happy at 2.1 months of inventory. That means things are moving. The amount of inventory is matching more or less where buyers are consuming the property. That rate of consumption is looking great.
Yeah, absolutely. I mean, I know nationwide, the National Association of Realtors generally looks at a balanced market somewhere in the 4 to 6 month range. I think the Valley tends to skew a little bit less than that as far as more of a balanced market. But even so, between 1.5 to 2 is an extremely low number and definitely means
Yes,
that
absolutely.
it's a hot metric and showing that there's not a lot of homes on the market, which is going to create some opportunity on the seller side, not necessarily on the buyer side based on that. So, yeah. Well,
Yeah,
cool. Thanks.
so I'll say that I mentioned that I felt the market was towards balance, and I think that's still somewhat true. Those sellers are having that slight advantage in the market. We're still seeing some things that I'm sure you're going to talk about a little bit more in your other metrics, like concessions. We're seeing maybe homes are no longer averagely selling over list price like we had seen in a couple years past, but still selling for great numbers.
Right. Well, and let's look at the next metric then. So days on market, right? So this is how long it takes for a home to basically get sold. And this is another indicator of how much demand there is in the market, right? So inventory really is talking about how much supply there is, how many homes are available. Days on market is really looking at more of the demand side. And so what we've seen throughout the last year or so is a steady increase in days on market, going as low as about 21 days on market to where we are currently sitting at about 70 days on market. So that's expanded quite a bit, but it looks like maybe we're starting to trend down a little bit. So any thoughts on that particular metric?
Yeah, absolutely. Looking at the contracted listings that have gone under contract but are not yet closed, their average days on market is sitting about 50 days right now. So that's already a reduction from closed listings, which would be those that went under contract a couple months, maybe a month or two ago. And so we're seeing that shift in the market, driving that demand, pushing things along just a little bit faster than we even saw just recently. And just in general, I think we're seeing demand pick up a little bit. People want to live in Tempe. They want to live in the Valley. It's a great place to be.
What do you think is creating that demand more recently in the last couple of months than maybe we saw a few months before that?
I think interest rates are going to be a key piece of any conversation in real estate demand. It just plays into that. What does a buyer pay on a monthly basis for a home? In the downtown Tempe area, we definitely see some seasonality in purchasing that maybe is a little bit more dramatic than the rest of Tempe as we get into looking towards the end of the school year, as parents or students may want to live closer to the university and not rent. So we do see a little bit of heightened activity as we get into March, April, May, June timeframe as some of that activity bolsters things. So that's a typical upswing for the Tempe area, particularly close to downtown and ASU. And then again, interest rates getting just a little bit better, I think, help things out quite a bit.
Yeah, definitely. And we're starting to see a little bit of an increase in sales, which is the next thing. We saw 118 sales last month. That's up from 102, up from a low of around 90 a few months back. Certainly not back to the peak levels we saw about this time last year, which was about 185. But I don't know that that's going to be realistic to necessarily turn back to immediately because of the shift that's occurred so quickly in the market.
Yeah, absolutely. And quite frankly, I am not anxious to get back to where we were this time last year. It was so crazy and so insane. Just now is such a great place to be a buyer. There's enough demand to feel really excited about your purchase, continuing to appreciate and value, still be something, a desired asset to acquire. You also have time to think about your purchase, make sure it's the right one for you. Buying a home is such a balance of logic and emotional consideration. And if you don't do both, then you could end up with something that you're not in love with. And having just that little bit of extra time that the current market is allowing is really allowing buyers to find that home that they love and give sellers a little bit more confidence in knowing that the buyers are happy with the home that they end up acquiring.
Yeah. What I see in every market, there's always a challenge and an opportunity in every market, right? People probably are
Absolutely.
kicking themselves for not buying 2 years ago because of the opportunity that existed at that particular time, but it was super challenging to buy. It was super competitive. I mean, you were competing against 10, 15, maybe even 20 people on a single home in some situations, which can be exhausting as a buyer. And now, because interest rates have increased and the demand has cooled a bit, there's definitely more opportunity to actually think about what you're going to do before having to actually make that decision and make such a large purchase like a home, for sure. And you mentioned earlier, it's largely driven by affordability, and interest rates is one side of that, but so are home prices. And we've seen a decline in home prices over the last year. We hit a high of around 523,000 in the median home price in Tempe, down to about 424.5, which is where we're at right now. And so that definitely frees up some affordability to help people in actually re-entering the market and not have to compete with as many buyers as we saw last year. You had mentioned this a little bit earlier, the sold to list ratio, right? That gives us an indicator of how willing maybe sellers are to negotiate. Last year, because demand was so high, sellers were able to sell their homes for more than what they even listed them for. They were selling as high as 102.7% of asking price, meaning in order to even compete, you had to offer more than what the home was listed for. Now we're sitting at about 98%, and that's far better than we were, but it's starting to increase. We hit a low of 95.7. So this, again, to me, kind of indicates that the market is heating up and that there is maybe some more demand returning and sellers aren't having to discount their price as much as they did before.
Yeah. And I think we kind of had a double whammy back in Q4 of last year. Q4 is historically a slower month for real estate here in the Valley. I think nationwide as well, but definitely for the Valley. And then as we get into the beautiful spring season that we get to enjoy, we see activity pick up. So we're between interest rates improving a little bit, people moving to the Valley, they want to get into a home as they think about the end of the school year, beginning of the next school year. All great things to help
Natural
drive demand
cyclical
on up.
nature of real estate, right? I mean, people don't want to
Yes.
move when it's in the winter during the holidays, and people do want to move when it's warmer and they are out of school. So it just is kind of the natural cyclical
Yes.
nature of the business for sure. So you've mentioned also seller paid closing costs a couple of times. And I think this again is an indicator as to whether it's gearing more towards the seller control or the buyer control. And what we're seeing is that over the last few months, we've seen an increase in seller paid closing costs, not only in the amount, but also in the percentage of sales that include seller paid closing costs. And so right now, 47% of sales include seller paid closing costs to help the buyer in covering those costs associated with the home purchase. And it's averaging out about $7,800 in concessions. So, I mean, considering we were at a low at 9% of sellers offering concessions, only at around 2,800 to go as high as where we are now, that to me indicates that there's still some negotiating power on the buyer side to get some help from the seller to make this all possible and make it more affordable.
Yeah, absolutely. And seller concessions are definitely part of a healthy, strong market. There are a number of ways that concessions can come into a transaction. Whether or not the property sells for list price, concessions may be part of that transaction, even going in some cases over list price to account for those concessions. It helps keep cash in the buyer's pocket at closing so that they can maybe do some changes or things that they might need to do, or just make the home affordable. They may have had their down payment saved up. There's additional costs, as you're so very familiar with, that are not accounted for in the down payment that are part of the closing process. And so those seller concessions can help a buyer just be able to move forward at all. And so they're definitely part of a healthy market, something I love seeing in a win-win transaction, and glad to see them coming back or just be back at all. Although as demand increases, it's one of the first pieces to be eroded away.
Right. We're starting to see that come down a little bit. I mean, we did hit around 57% of sellers offering closing costs, down to 47 now. So we'll see how that shapes up. But the name of the game, like you talked about, is affordability. And that's what's hurt over the last few months in terms of interest rates, right? So let me share a little bit of information about interest rates. I mean, interest rates obviously shot up significantly and very, very quickly. And the reason for that, a lot of people don't understand why that happened. Well, one of the major reasons why that happened is because of inflation. We've probably heard more about inflation, or maybe equally as much about inflation as we have interest rates, but they're tied together. Inflation is a leading indicator of where mortgage rates will go. And that's just because of how the economy works and what people turn to in times of inflation situation. And that's, they go to safer investments. A safe investment are bonds, and mortgages are actually packaged and sold on the secondary market as basically bonds. And so as inflation goes up, of course, mortgage rates will go up with it. But of course, I'm sure everybody knows, we've seen the prime rate, the Fed funds rate increase. And that's, we hear all about rates being increased. And one thing I want to make clear is the rates that we hear about being increased in the news are not mortgage rates. In fact, they're about as far from mortgage rates as you can get. When we're talking about the rates that we hear in the news of going up, what we're talking about are overnight lending rates between banks versus a mortgage, which is a 30-year debt versus an overnight debt, right? So very, very different types of interest rates. But here's how they do impact one another is when that Fed funds rate goes up, what happens is the short-term lending rates on things like credit cards, car payments, auto loans, those things become more expensive. And that's what the Fed is trying to do, is they want to make those things more expensive, because the more expensive they are, then what happens is people buy less of them. When people buy less of them, then the supply goes up and therefore the cost goes down, which brings prices back in check. And that's what brings inflation down, right? So as inflation reduces, we can fully expect, as we've already seen with some slight reductions in inflation, mortgage rates are going to follow right along with that. So that definitely makes things more affordable there.
Buyers and sellers have bought and sold real estate when our interest rates were 18%. We have, since we've had this vehicle available to us, we have found places to live. We have moved from one place to the next place. That has always happened through time. We want shelter. We like being able to live in places that we like. And interest rates help us do that faster in a more affordable rate. So I do expect that we will see interest rates come down as inflation continues to get tackled and get a little bit more under control, which will help make buying all the more affordable for buyers and make that whole buying selling process speed up, hopefully, for everybody involved in the real estate business, whether you are just an owner or buyer, but all the others, the rest of us who are involved. So yeah, I think interest rates are going to continue to improve. Inflation seems to be headed in the right direction, although at a modest rate. I'd like to see it headed a little bit faster, but I think we're going to see some things headed in the right direction very quickly.
It's a double-edged sword though, right? Because I mean, as
Yes.
rates come down, that means home ownership is more affordable. When it's more affordable, more people want and are able to buy, and that's going to bring more competition. And we've already got very low inventory, as we talked about at the beginning of this market update, right? So it's already low. And if we bring more demand back, we're probably going to create a somewhat similar situation as we saw a year ago. Probably not to the degree, because rates aren't going as low as where they were. But at the same time, there's going to be some competition coming back. And so one thing I'd like to share is something that we're offering to potential buyers right now, because I think that there's a window of opportunity before we start seeing inflation really start dropping and rates dropping along with it. Is you can take advantage of this opportunity of sellers willing to negotiate, maybe lower than their asking price, maybe pay some of those closing costs. And you can use those in different ways, whether it's permanent buy downs or temporary buy downs to make the monthly payment more affordable or to reduce your out-of-pocket expense. But one of the things we're offering is a certainty guarantee, which allows you to buy now while interest rates maybe are a little higher than where they will be. And what we will do is we will refinance any buyers that close with us within a 2-year period of time at no cost to them. So you can get in while the competition is lower and then refinance at no cost when the interest rates drop. So you can kind of get the best of both worlds, where most people are going to be sitting on the sidelines waiting for rates to drop and then having to compete against other buyers, which is going to increase the price. You can have it both ways with our certainty guarantee. So that would be a way for things to maybe make it a little bit more affordable.
Yeah, that's an incredible program that you offer to buyers, because although refinance can definitely be a great option and really make your monthly payment very affordable, there are costs that go along with that, usually worthwhile costs. But to have that guarantee built into your new purchase loan today, that's an incredible gift. That's a really great offering that you guys are providing.
Yeah. Well, thank you. Well, any other thoughts about the market in general that you want people to take away from kind of where things are at in Tempe?
It is a great time to buy. It's a great time to sell. It is always, there's always the opportunity to find exactly what you're looking for in that perfect transaction. So if it is the right time for you, then don't feel like you need to hold back.
Exactly
Talk
right.
to someone who knows what they're doing and make the right investment.
And that's the key, is deciding whether it's right for you. For some people it is, and for some people it isn't. If you're happy with your home and you got a 3% interest rate on your mortgage, stay put. If you, on the other hand, you're
Yes.
renting, you want to enter the market, then you can lock in that monthly payment, secure it with even a lower monthly payment with the certainty guarantee, and put yourself on the track of gaining equity over time. And there's all sorts of situations in between those two where it might make sense and it might not. We would love to help you out in identifying whether or not it's the right time for you. So let us know if we can help you out. Summer is a great resource. We can be a great resource. So please let us know if there's anything at all we can do to help you out. So thanks for watching.